Welcome to QStocks, your trusted destination for financial clarity. In today's episode, we take a deep dive into a development that could affect packaging, consumer products, and the overall input cost landscape in India. Reliance Industries has announced a price hike in PET resin, and this change could reshape margins for dozens of companies. Let's unpack the details. On 16th May 2025, Reliance Industries raised the price of PET bottle-grade resin by 3 rupees and 50 paise per kilogram. The change took effect starting 17th May. This news, first reported by Polymer Update and confirmed by Refinitiv, impacts all industries that use PET as a base material, especially FMCG and beverage players. PET, short for polyethylene terephthalate, is a widely used plastic polymer. It is primarily found in packaging, from mineral water and soft drink bottles to food trays, personal care bottles, and even textile yarn. Given how embedded it is in everyday packaging, any price movement in PET has immediate implications across multiple industries. The reason behind the hike lies in upstream cost pressures. Feedstocks like paraxylene and monoethylene glycol, which are derived from crude oil, have become more expensive globally. These are the basic building blocks of PET. With demand remaining strong, Reliance has opted to pass on the cost rather than absorb it, protecting its margins in the process. As the producer of PET resin, Reliance Industries stands to benefit the most from this hike. Selling prices are now higher, and that boosts margins in the company's petrochemical business. In an environment where refining profitability is cyclical, this upward price adjustment adds stability to earnings. The effect could trickle upward. Companies that produce chemical feedstocks for PET, like GAIL, Indian Oil Corporation, and ONGC, may see better demand and pricing for their products. If Reliance ramps up feedstock purchases, their volumes could improve, translating to better utilization and earnings growth. There might be a temporary gain for film manufacturers like Uflex, Cosmo Films, and Jindal Poly Films. If they had built up PET inventory earlier at lower costs, they may record short-term inventory gains. However, sustaining this advantage will depend on how easily they can pass future cost increases onto their customers. On the other hand, beverage bottlers are likely to feel the most immediate impact. Varun Beverages, which bottles Pepsi products in India, uses large volumes of PET for cold drink packaging. This sudden cost increase, if not passed on quickly, will eat into operating margins, especially during the peak summer season. FMCG companies like HUL, Nestle, Dabur, and Marico also use PET packaging across their personal care and food lines. These firms now face higher input costs. While some have pricing power, raising MRPs quickly across all product lines is not always feasible, especially in price-sensitive categories. Another group to monitor is the polyester yarn industry. Companies like Filatex India and Indorama Synthetics depend on fiber-grade PET. Although the current price hike is for bottle-grade PET, such increases often lead to upward revisions in fiber-grade as well. If that happens, their raw material costs will rise, tightening profit margins. The winners from this move include Reliance Industries and, to a lesser extent, upstream chemical suppliers. Packaging companies might benefit in the short term, while the downside is more visible in FMCG, beverages, and potentially textile stocks. The broader takeaway is that cost inflation has returned to the value chain, and it's being felt at the consumer-facing end. Investors should watch for commentary in the upcoming quarterly results of affected companies. If Varun Beverages or Dabur report lower gross margins, this PET price hike will be a contributing factor. At the same time, any improvement in Reliance's petrochemical earnings will likely validate the benefit of the price increase. From an investment perspective, now is a good time to be selective. Exposure to Reliance and upstream players may offer short-term resilience. But caution is warranted in sectors where margins are already under pressure and cost-push inflation is hard to pass on. FMCG names with lean pricing flexibility may underperform in the near term. Three things now matter most. First, Will Reliance hike fiber-grade PET prices too? If yes, textile stocks will face further risk. Second, will FMCG and beverage companies absorb this cost or hike retail prices? That choice will impact volume growth. Third, will global crude prices ease in the coming weeks, helping lower input costs across the board? Closing thoughts. This PET price hike might look like a technical update, but its impact is widespread. From your soda bottle to your shampoo pack, from corporate profits to stock valuations, this 3 rupees and 50 paise per kilogram change ripples across the economy. And that's why, here at QStocks, we break it down for you. If you found value in today's video, be sure to like and share. And if you're new to the channel, subscribe and hit the bell icon so you never miss a financial story that could affect your investments. This is QStocks, helping you stay informed and stay invested.